David Morgan here in Vancouver, British Columbia again. I'm at the June Cambridge House Resources Conference, and it's my pleasure to talk to Dave Wolfen again with Avino Silver. Now, Dave, it's been a while since we spoke about your company. A lot of progress. Some of it's been, I guess, at the Mexican pace. Can you kind of bring us up to speed what's happened about the last 3 or 4 months?
Yeah, we're ramping up to achieve commercial production. We've been developing the new San Gonzalo vein, and we hope to be there by the end of this year.
And when you are there, your production rate initially is going to be what, 250 tons per day?
Yes.
And with the grades that you have, what's it going to equate to?
It's about 900,000 ounces of silver annually and about 4,500 ounces of gold.
So we're looking at round numbers, 1 million ounces of silver equivalent.
Yeah.
And I know there's a lot of expansion capabilities. You want to talk about what you've done recently?
Yeah, recently we signed a new 20-year NSR agreement with the Mexican family, which allows us to now go and look to dewater the old mine and upgrade the mill to 1,250 tons per day. So that's our second area of expansion. That'll take about 12 to 16 months before we get that up and running. And the third area is the tailings. We've been working on a PEA, Preliminary Economic Assessment report, to build a standalone leaching operation which could produce another 1 million ounces of silver annually.
Let's talk about the leaching operation as kind of a side issue for a minute. You know, I've heard this again and again, because in the old days, a lot of the tailings were pretty rich. What's the grade that you have in the
The grade of silver is about 100 grams of silver, about half gram gold, and there's a little bit of copper in there, so in the sulfides, not in the oxides.
And you're going to use cyanide leaching, I assume?
Yes, yes, and they didn't have that technology in the 70s when we were open pit mining.
Right.
So we had poor recovery rates because traditionally oxidized ore doesn't recover well under flotation methods. So all our profits from the 70s and 80s are sitting in the waste pile.
Right. So when you do this methodology, it's my understanding, and you probably know more about it than me, but you know, I study this stuff religiously. Silver doesn't leach as well as gold, but still the recovery rate's going to be what, 70–80% on this leach method?
That's correct.
Yeah.
It'll be an agglomeration heap leach Merrill-Crowe system.
Okay.
Yeah.
So obviously economic, and that was going to add, if I heard you right, another 1 million ounces a year, and that's about 3 years out, right?
That's right.
So if I did the summation in my head correctly, we're looking maybe 3 years out, projected forward-looking statement. We'll give you the caution there. Possibly 3 million ounces a year producer by 2015 or something.
That's our goal.
Great, awesome. Well, that is very good. Why don't you talk a little bit about what else is on the plate with the company as far as, you know, you have other projects besides Avino. Can you address those a little bit?
We have a little land package up in the Yukon surrounded by United Keno Hill mine, which is owned by Alexco. We optioned that off to a little company so we don't have to spend any money and get it advanced. So we have that. We have some ground in the BC Braylorn district. But basically those are in inventory. We want to get cash flow from Mexico first before we go and look to expand.
Let's revisit slightly the United Keno Hill area, because you know and I know what it's all about. Of course, we get new members all the time. Never even heard the name before. But why don't you explain how rich a district that is?
Wow, that was probably the biggest silver producing mine in Canadian history. And Alexco went in there a couple of years ago and bought it out of receivership, and now has reopened it in the last 6 to 8 months. And that area is booming now. So there's a lot of exploration going on, looking for new veins that can be used to feed the mill.
Right.
Yeah.
One area I don't get into with a lot of CEOs, but we had a little discussion before we started the film, and that is, you know, your worldview, your take on the economy, the way you see it as a mining executive. And I'm going to preface it with this, that, you know, a lot of people that are pretty well known in the industry, myself included, look at silver as more than just an industrial commodity. We look at it as an industrial commodity and as a store of value, wealth preserver, money, if you will. Eric Sprott, I would say, not speaking for Eric, but I've been around him and too many times heard him speak, big proponent of silver as a means to preserve wealth. We spoke before, and you indicated, I just want you to confirm it on film, that you see the fundamental reason for owning silver probably being greater today than it was, let's say, a few years back. You want to elaborate on that?
Well, he is our largest shareholder, and I've met him in person, and I asked him what his forecast is, and he felt that the forces that brought metal prices to where they are today have not changed. They've worsened, and right now we're in a turbulent time, but once the dust settles, metal prices should continue to maintain their value, if not go higher.
Very good.
I agree with that.
I do too.
Yeah.
I've said basically the same almost exact words, that the fundamentals for owning gold and silver have never been better than they are right now, and that is not reflected in the price. So I see that as an opportunity rather than something to be discouraged about. Of course, you know, people have emotions. I do as well. And when you've bought, you know, at the 35, 40, maybe even the 45 level, and you're sitting here around, you know, below 30 today as we speak in early June, you can be upset or maybe give up on your position or feel maybe you made a mistake. And there are people out there that believe that the commodity cycle is over, and I don't. I think that the commodity cycle is ebbing and flowing, and we probably have some more work ahead of us, but I don't think this commodity super cycle is over. The average commodity cycle is 17 years. So if you look at it from starting roughly in 2000, going out 17 years, that projects to 2017. The other thing is that I know markets pretty well, and there are no guarantees, obviously, but usually you get the last phase of the market being what I call the panic or mania phase. You saw it in the housing bubble, you saw it in the tech wreck, you've seen it in almost all the markets, you saw it in the NASDAQ, and so we have not seen that in the metals. We've seen the mainstream media tell us that gold's in a bubble, but yet it really isn't. In fact, for gold to be on par with its 1980 high, it would have to be about $2,500 the ounce right now, and we're not there yet. So that was when things were substantially more stable than they are right now. So I'm still a big believer in both gold and silver. I think owning the mining shares, especially companies like yours that have a great growth profile, is probably one of the best ways to participate, especially comparing it against the metal itself, which I still advocate you should own first. But I think dollar value invested today, early June 2012 for the record, you're probably better off buying underlying mining equities than you are buying the metal itself.
Yeah, that's the best leverage to the metal price. And when we made our decision to rebuild the plant in 2008, silver was at $15, and we felt we could make money at that time. So at 30 or 28, we're happy with this price that we're at. And our recent bulk sample numbers came in at just under $8 an ounce as being our cash cost. So we look forward to the metal price staying where it is. If it goes higher, that's great.
Excellent.
Yeah.
Well, we've thrown out a little bit about the silver market in general, a lot about the updates on Avino. Is there anything I haven't asked you that you would like to tell our viewers, before we close out?
Well, I just hope that they continue to follow our stock and watch us grow, and hopefully they participate with us. And company's debt-free, and it's been around for over 40 years, so we know how to survive during tough times and prosper in the good times. So hopefully they'll prosper with us.
Very good. Well, David, it's always a pleasure to interview you. Thank you so much for your time.
Thank you very much.